Like, oh man, it's 7:30 in the morning. I need to get to bed. I'm so tired. That's Forex for you. All right, well, let's get going. G'day, mate. Hey, it is Tuesday, May 26th, and we're just starting our week due to the holidays. Tuesday, the 26th of May, 2015 is your daily Forex trading strategy session. My name-o is Wayno. I'm the Chief FX Market Strategist for TradersWay.com. Thank you for being a client. We're an ECN that offers you Forex, energies, metals, indices, binary options, and love. Because we love you, man. Today we're going to do commitment to traders report. I think we should just do some technicals, and that's that. As you know, the dollar's been strong the last 2 or 3 days, but the last time we met, and the time before that, and the time before that, we were all buying dollars. So very nice. So it worked out really well. Let's get going. Let me remind you that trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, does not predict future results. Therefore, always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. All right, good-looking people. Let's do some technicals first before we do commitment to traders report. Just to realign the satellites. We have a lot going on up in here. When we drew this reversal pattern, we were waiting for a reversal pattern. It came up and made a very similar pattern. I'm just one shoulder off. But fairly accurate, don't you think? And so that's why we do these. That's called a trade plan. Because if what you have planned, and planning is an educated guess, right? You're thinking, hey, if it reverses up there near resistance, it'll reverse in such a way that it might create a reversal pattern. What would that reversal pattern look like? And then if it actually occurs, maybe you recognize it and you trade the way that you planned it. Well, it didn't come out exactly right, but nonetheless. Came to the bottom of a range. Okay, what I did is I connected this high with this low. Right, I think you can see that. This high with that low kind of gave us a guesstimate on price action back to the top of the channel, which is also the high to the left for a shoulder type retracement. You follow? But if we zoom in, it actually used averages. Came up to the 2155, which you know, let's call it a cloud, right? You can treat it like a cloud. After 2155 cross, the market is technically bearish. We've discussed that lately. And that the next entry is typically 5-8 cross down after a test of this area in here. Okay, that's classic, right? And that's the whole sum of my book, really. If you want to take 250 pages and melt it down to the, you know, to the meat, that's all it really is. The 2155, in fact, hang on. This isn't the easiest to see. Let me back up just one click. Okay. Okay, the sum of the 250 book, as far as technical analysis is concerned, is to pay attention to when the one crosses below the 55, as it does here. All that means is the market is now, technically, this time frame, which is a 4-hour, bearish. Okay? But by the time that happens, the the 5-8 cross has already occurred. So price has already fallen, but the market has just turned bearish. So the next trick is to wait for price to return and then drop. Make a new bearish move, 5-8 crosses down, after the 21 is below the 55. So now price action is bearish in a bearish market. So, you know, first point is here. That's when you take your bullish hat off and put your bearish hat on. The next one is in here. That's where your trick should be short. Okay? And then you can throw in all the diversions and all the other stuff. So cool. But nonetheless, we've been short this much earlier. If you remember on some time frames, we had stuff going on up in here. I think this is where YJ shorted the lower low, lower high. Remember, guys? I said I was waiting this on like an hourly or something like that. You guys remember doing that? As soon as we get lower than this low, then technically you have a scenario like that. So now we have to set up a 1, 2, 3. Yeah. Yeah, I'm pretty sure YJ got that. He was all happy. Cool, so that's just the same, it's really the same thing as this bigger pattern. Okay? Just on a smaller time frame. So instead of on the 4 hour, this one up here, it's the same thing, happened on a 1 hour. Cool. That's called fractal geometry. Okay? So I'm hoping some of these things click in. So what's the next one? Now can you predict? Because you're probably sitting there going, yep, sense, yep, makes sense, yep, makes sense. Then I say, okay, well, tell me what's going to happen in the future, and you're like, I can't tell you that. Well, isn't that our job? To know everything and then accurately predict the future every single day. That's what currency trading is called or defined. Right? Pretty soon now you're talking with your buddies about the IMF. And they're like, what's the IMF? And you're like, oh yeah, well, let me tell you. You got to know everything all the time and accurately predict the future. Other than that, it's pretty straightforward, right? So, would you like me to tell you what I think the future might be? Oh, Timmy wants to know if my book is available as an ebook. You know what? When you write a book and get published, you sell the rights to a publisher. So it's not my book. So that was published by Wiley Publishing. It was a top seller for about 5 years. So Amazon.com, baby. Okay, I'm going to tell you the future according to Wayne. At some point it might come back up here. How far, you say? Well, I don't know. So I got to do a couple of things. One, measure the distance from here to here to look for a fib. But I also got my eyeballs on this area here and this area here. I mean, they're probably fibs of this, so it's all the same, right? So here's my short zone in the future. Generally speaking, drop it like it's hot, drop it like it's hot, drop it like it's hot. Something like that. Okay, am I suggesting buying it? No. Right? No. But if it does, sell again. Now, how do you know when to sell? Well, that's the easy part. I mean, right? That's the easy part. You could do a bad job of it and probably still make money, right? So if you're in here or in here, and you're watching this on now not a 4-hour chart, but a 15-minute chart, and the oscillator is way overbought, or there's a 5 a cross, or there's a 55 cross on a 15 to catch the 4 hour. Maybe you get a reversal pattern, price action stuff. I mean, it really doesn't matter. When your RSI overtakes your CCI, pull the trigger, dude. I would say the most important part of this is the resistance. Okay. And what I'm looking at is this is a resistance zone in here. So I'm going to look to sell up there since we're making a series of lower highs and lower lows. So the hard part's done, and that's identifying the resistance zone. If something happens in the market and price goes a little higher, it does this. What happens? Well, I lose some money. What's the big deal? It's only a big deal if you're over leveraged. If it goes there, well, I didn't think that, therefore I lost money. And my entry was probably poor. It's most likely I didn't get a reversal pattern in here, because if I did, it would have reversed. But let's just say news came out or something. Well, then I take the loss, and maybe, just maybe, I look at that. But I don't think that's going to happen. I'm not even worried about it. It's not. I understand what I'll do if it happens. I don't think it will happen, or I'm not worried about it happening. If it happens, I lose a little bit of money. It would only hurt if I'm selling late, right? An amateur is selling down in here, right? So they would lose a ton, because now here they're praying, hands and knees praying, then it goes up and whatever, right? So, but if you sold where you were supposed to sell, it's no big deal. Good job, right? When you're wrong, it's not that big of a deal. So, on a smaller time, what are we going to do with this today? You know, it'd be cool to sell this. Oscillator's just about ready, but because we're kicking off the 55 here, it suggests a double bottom. So I go back to the hourly now. That's the 15. Go back to the hourly. And hourly says up, doesn't it? The only thing is we're trending, right? So you don't pay too much attention to the oscillator. So I'm going to have to play this for now. If we were, you know, again, like I was saying on the other one, if it does go higher and the 15 pulls us through the 21, then you take a small loss on the 15-minute trade. What'll probably happen is it'll come up to the 55 double bottom, and then it'll definitely come up. Because now you have the swinging up and the 15-minute already making higher highs and higher lows. And the next target would be up in here, as we already know, because it'll be coming into the 200 EMA, but this is our future sell zone. What I'm thinking here is up until the hourly is way overbought and then willing to sell. Which might just be tomorrow in London, right? So it might be setting up, guys. The retracement might be setting up. You need to decide what you're going to do. I don't think it's a bad idea to sell it again, because now you have to imagine that this is the hourly 21 that we're on now, right? You see what I mean? So 5-8 cross down here, or how about a 5-8 cross down on a 5-minute chart? Well, Mark wants to know if we should wait for the durable goods. Well, you got two choices of what you can do. It's not a tough decision, as you can see. You can trade it now before the news. Or wait until after the news comes out. But, you know, if you're making this trade, I wouldn't do at the news. So let's say you do it now, 45 minutes before the news comes out, so that when the news comes out, maybe your stop is either closer or at break even. It's amazing how often things just happen to work out. That if you're selling where you're supposed to, the news is going to come out and just magically it's in your favor. And you're already good to go. And you were risking very little because let's say normally you have a 50 pip stop. So maybe 45 minutes from now, right before news comes out, you're able to move it to break even or minus 20 instead of minus 50 because it's already profitable. That kind of thing. I mean, wouldn't it be great if durable goods are coming out and you're already hero or zero or on your trade, you're either going to make 50 pips or going to lose nothing? That's a good scenario to be in, especially if you can do that 3, 4, 5 times a day, where your stop's at break even, and you know, you're either going to hit your limit or you're not. Doesn't matter to you. Okay? Does that make sense, Marky? Yep. I think, like, for example, I think we can all agree that this was some level of support in the past. So it just might be some sort of resistance now. That's a 5-minute chart, guys. Quickly look at the hourly. We're right near that moving average. Cool. So now you wait. So Mark says, good point. You get stopped out a lot before the news, though. Well, first of all, that's not a big deal, you know, because you're not losing money, right? But, you know, we'd have to look at when you enter your trades, where you enter your trades, why you enter your trades. There's 1,000 reasons that you could be breaking even a lot. And we don't know what they are until we, you know, observe what you're doing, look at the numbers, you know, approach it from a scientific method approach, and then make some small changes and tweak it. Like I say to anyone that comes to me and says, "Hey, Wayne, I need your help. You know, I need you to mentor me or something," and I say, "Okay, well, why do you need that?" "Oh, break even so much. Can you help me?" And I'm like, "Well, I don't know why you break even a lot. It might be the best thing ever." Right? Think about it. Your trades could be horrific. Moving your stop is probably the only thing, right, that you're doing right, because every bone in your body says, get out of the trade while you can. Your trade's horrible. Move your stop. It might be awesome. But for other people, they're just mismanaging a really good trade. Right? So how do you know? Well, that's where you have to, you know, start really looking at your trades and so. Right. Find out who you are as a trader. Forget about breaking even. All right, so again, you'd be waiting to pull the trigger to the downside. You got the oscillator trying to come down, but no 5-8 cross. Touch the 200 EMA. Okay. Do you think it's a coincidence that the 200 EMA on the 5-minute is very similar to the 21 EMA on the hour? And that the 21 EMA on the hour is very similar to the 5 EMA on the 4-hour? which is similar to the 55 on the 15. Yeah, well, that's all math. All right, so someone's already selling this, right? Yo way, yo way. All right, so let's do another one. I just thought it might move here. You know, of course, you can throw down a binary and be done with it, right? Yeah, let's look at USD yen. Do you guys remember I talked about this thing could go up to 123, I think it was? Does anyone remember what I actually said? I remember it sounded a little outlandish at the time. Well, it did go up, and in fact, we just hit an 8-year high. And I said it would go even higher. I mean, what an outlandish thing to say. Does anyone remember what it was? I think it was 123. We were like, way down somewhere. Yeah, it was 123, wasn't it? Yeah. Oh, 125? That might have been before. No, I think it was 123 to 1. Okay, 123 to 125. Okay, good. All right. Just remember, if you don't remember it, it didn't happen, right? So where's 123? Well, let's ask the horizontal line to do it for us. 123, Mr. Horizontal Line. There it is. Cool. So let's try to find where I lost this. Clearly it wasn't this chart. It's probably on this setup. I have a lot of things on this one. Let's see. What was my plan? Oh! How did I do? Thank you. Thank you. You guys remember doing this? We started here for a target here, and if it didn't go down, we were going to let it break and pull back, which it did. Then we bought it here with it going up here. And again, an 8-year high. I mean, pretty significant, right? I mean, it's hard to just guess an 8-year high. Yeah, cool. So anyways, high five. I hope it's a learning experience. It's not, I mean, no, I've always said there's no glory in Forex, so it's not about me. I mean, that's just my job. So, but I hope you're learning from the experience, because I try to do it. I try to do the analysis with your help, not telling you what I think. And I hope it's helping, I guess is what I'm trying to say. Cool. Okay, we'll look at USD CAD. Wait, that was USD CAD. What? It's funny because it's the same price, guys, 123. We're all fooled. We're all fooled. We played a joke on ourselves. That was USD CAD. It's the same price though, 123. So USD yen was this one. That's so funny. Don't! Hey, we all loved it. We all gobbled it up, right? At least the dog eats the dog food. All right, cool. Well, in very similar fashion, we did talk about 123-ish. You don't see it on this one. But I think it was this gray zone, wasn't it? So I think what we were talking about was the big old pullback into this zone here. Right? And if that didn't work, it was going to be this one down here or the bottom of the channel, right? Obviously. Is this starting to ring a bell? So that the plan was buy the dip. First one was going to be that 3A2. And the target was going to be the gray zone, which is this area here. Okay. That makes sense, right? Are we good? Yeah. Hey. Fernando, it sounded Scottish there for a second. I don't think Fernando has a Scottish accent, though. So anyways, it's not as pretty, but I still think we get it, right? Are you looking at the oscillators? Oh, okay. So anyways, if you notice this, when you break, I've trained you to catch the pullback, right? So once you break, you're going to look to retest. And look how the oscillators can help you. Okay? So just make a mental note of that. Divergence. I'm not sure what divergence we see. Divergence is one of those things, is very often people are talking about two different things. Yeah, but I get you're saying this and this. Okay, yeah, see, I wouldn't say it that way, but, you know, to each his own. Yeah, yeah, to me, I'm trying to get a better example. See, I use divergence for reversals. You wouldn't get them in continuation patterns and stuff, but you know, again, you might be using something different. A lot of people use divergence using the histogram. I don't even use the histogram, but let's say we had price doing a double top like this, but the oscillators, let's say oversold, all right, overbought. Wow, you know, this isn't lining up. Hang on. Let's try this differently. It's going to kill our analysis, but it don't matter none. Template blank. All right. All right, so let's say the price now, and down here will be the oscillator. Let's say price is doing it might be doing a double. Okay, that's where we are price-wise. And the oscillator will probably look like this. Okay, divergence if it's like this. Okay, we're making it a top on price, but we've already lost the oscillator, which tells me a lot of the bulls have gotten out on this retracement and even still are getting out. But divergence the other way, price making high, this is only, well, see, I don't see how the oscillator could have gone more than 95% overbought. So, but that's just me. There's 1,000 million ways to trade, as my kids would say, 1,000 million, 1,000 million, 100 ways to trade. So I'm not saying what you see is wrong. It's just I wouldn't do it that way. Your way, your way. Do, 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 do. Any other currency pairs? Yeah, pig yen. Lots going on up here. Just drink that in with your eyes and zoom in closer. Okay. I think that's what's in here. But, you know, it's interesting. I almost feel like it's going to do like what we just talked about, that it's going to diverge. But anyways, higher high, higher low, right? Let's kill. Oops, I don't want to kill that. Well, yeah, I'll kill that. Okay, so the gray area is the previous high. Higher than that, you look for the retracement into the fib. Sweet spot 382 to 618, but the 382 is already lined up, right? It's already highlighted. So that's the sweet spot right in there. It's a 50% retracement, so that's somewhere between the 382 and 618. So the target is weekly R2 at 192. Roger that? Notice how we had a 382 was on the first breakout. And 618 and another 618, yeah. I used to try to pay attention to that. Never really came to a conclusion, but it's funny, since I'm self-taught, I called that frequency. Turns out, if you do research on frequency trading, it's something completely different. But I always wondered, if the market was making a series of 382 retracements, and then it's moving very fast, but what if it's slowed down to 618 retracement? Well, then it's slowing down, and 718 would almost certainly predict a reversal, lower low. So I used to pay attention to that. But I just use other things. Of course, a frequency trader does something completely different. So anyways, that's happening. We'll see. I have a little bit of doubt on it, but like I told Mark, don't worry about it. Do what you're supposed to do until it reverses. Hey, Buzzy. How's Egypt treating you? Really? That's weird. I would never think that Egypt was hot. So strange, man. Oh well, unusual weather, must be global warming. Yeah, it's supposed to be hot, Buzz. Right? It's funny how people do that though, right? Like, man, it's hot. You get that anywhere though, right? All right. Lots going on in here. Maybe we should clean some of this up. Maybe clean it all up. Should we get rid of gold? I don't want to do too much. Let me just try to find some of these. I guess I can kill the fibs, right? Let's do it again. Let's sort this. FIBO. Delete, 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 delete. Yeah, good enough. All right. Okay, take a look at it on a higher time frame. I have it coming down to here. You can see it's been pretty choppy. I haven't followed up with it in such a long time, but to me, nothing fundamentally has changed. I would say technically, now, I got to play the range, and the range is even tighter than it used to be. I don't think I can grab this. No, too much going on in my chart. Oh well. So I'm just saying that this top gray zone and this bottom gray zone is probably where we're going to be for the rest of the year. We're halfway around. So my only strategy for the last 4 years on gold was to sell high. And, you know, again, nothing's changed, so pretty straightforward stuff. And that's that. And I don't think it'll go much lower than that. I think the closer we get to 1100, the more people are going to buy it. And the higher it gets to 50, the more people are going to sell it. And that's that. Okay? And that's that. I don't think anything's going to change. Crude, how are we doing on this crude? $59, huh? I was reading how somewhere, I can't even remember where. Because I don't read that much financial stuff. I'm not sure why I've read it, but it was. Oh, you know what? It was Bloomberg Radio. They were talking about it. They were really surprised. I'm like, really? Because I figured it would have done that, but it was December when I put that together. So cool, man. It hasn't followed through yet. It hasn't followed through yet, but it kind of looks like it wants to, doesn't it? Doesn't it look like it wants to make a lower low? Or does it feel like it's getting ready to bounce? Well, you know, the bounce should have happened here, and that would have made a lot of sense too. But it got the nice reversal pattern, right? That's a reversal pattern, a bullish reversal pattern. Red, red. Yeah. So, you know, it'd be interesting to see if it can get lower to the next level, which is about 55. And again, what's the genius here? Find the resistance, look for reversal patterns. Don't look for reversal patterns. They're irrelevant. You look for resistance and then reversal patterns, or support and then reversal patterns, depending on what your fundamental analysis tells you, right? Whatever your bias is. Now, it could still come down to this area and then work its way up. Okay, that's fine. But if it came down, hit 55, that predicts it'll go up and then come back down too. So, whatever. Now, I don't remember what happened, but remember how it said sell oil? We had that like that for 6 months. I don't know where it happened. Last week somehow it got deleted by accident. But I hope you remember it anyways. But this pattern here, I think you remember, we drew that, looks like the first week of April. And May is ending today, right? Or this week, I mean. So this is a whole like 7 weeks in advance, right? Yeah, we'll see, Sebastian. Okay, so again, nothing really changed there. I'm cool. I'd like to see it go through. Certainly too late to do anything now if you didn't do it before. Market. Okay. The first buy zone is here. Okay, which means today might be a stock market buying opportunity day. Your way. But it looks like it's coming down. Well, we'll see, man. Because it was supposed to stay below this if it was bearish. What direction does the stock market want to go up? Oops. Right? Oh, I actually said it. Oh, I'm sorry. Yeah, trick question. Sorry. I can't think and... All right, what direction does the stock market want to go? The stock market wants to go up. Last time the traders were trading, price was up here. Okay, then they went on holidays. And they come back now. Is it possible they do one of these? Okay. Yeah, they say it was here. They come back like, oh, it's on Friday, but now it's a little better. Looks even better, man. What's right? What's the first trade going to be from the New York boys? Well, maybe it's that. Now, if it's lower than that, what's plan B? Zoop, zoop, zoop. Okay, but very few people want that. I know what I was reading. That's why I thought I was reading Barron's. That's what it was. Someone brought me a Barron's, and I really enjoyed it. There's this one guy who is like makes hundreds of millions of dollars a year, and he runs a hedge fund. And his hedge fund owns 35 stocks. And maybe twice a year, maybe 3 times a year, he buys a new stock and gets out of a different one. That's it. He makes 3 buys a year and gets $100 million for it. Like, well, what do you do the other 99.9% of the time? Like, okay, well, that takes care of a morning. Right? Let's see. How long does it take you to buy 3 stocks? Well, what else do you do? Yeah, I guess the other time he looks for the other stocks. But you know, to me, it's so easy. But I don't know. I shouldn't say that. But because I look at it, because the whole article is like, this guy, he's such a genius. You know, his portfolio's gone up 28% for the last 3 years. I'm like, 28%, but the stock market's doubled. Like, that's it. But anyways. So anyways, guys, you should put that on your things, you know, your to-do list. You should run $1 billion hedge fund that makes you work 3 minutes a year. Even Siddhartha had tried something like that for a while. So notice the price action, this big old drop, and then the big significant pullback, then retest of this line here. Higher high, higher low, higher high, higher low, double top, double bottom. So what I'm hoping is that it just double tops and double bottoms, that we basically stay above that gray zone. That's what I'm hoping for, right? And that we're just slowly climbing the ladder. Maybe not this week, or maybe not for a few days, but eventually break above and then be up in a new range. And we look at this top as the next, you know, support. But right now, because we have a double bottom, I'm going to assume it's going to go up to the double top and then it's going to come back to the double bottom. Okay, that's my assumption right off the bat. Okay. And I think it's very similar. When we were up here, I said that it was likely to come back down, but I wanted it to break to the upside. If it breaks to the upside, then we want to buy the dip and use it as support, so on and so forth. Because I had an arrow pointing down. I deleted it as we were talking. But you could see that we thought it would go up, and then here it had the chance of coming back down. Because I'm always going to assume that the trend is going to continue. Now, the trend might be sideways. If we're in a range-bound market, I'm going to assume it's going to stay moving sideways until it breaks. And then when it breaks, I know what my next plan is. Go with the trend. Okay? I never assume it's going to break. So I'm going to assume the trend continues down. I'm going to assume the trend moves sideways. But when it breaks, then I need to adjust. And that's probably the difference between an amateur and a better trader, is knowing when to change. You can't flip both, swing both ways like a broken gate, but you have to know when to adjust. And that's critically important. So right now, it's range bound. But I'll give you my guess. My guess is we do this. We do this, we do this, we do this, we do this. Okay? I say that level only because there's pivots there. Don't you find it interesting that that the target is narrowing? Lower highs and higher lows? Feels like a wedgie.
3% capital goods orders expected at plus 0.3%. Capital goods shipments, non-defense expected at plus 0.3%.
You can just note for Poland, we did see the election results in which the competition won the election.
5-8 cross down, you noticed it?
The incoming president, just seen the zloty reacting following that weekend event. It's off 1% against the euro as the trade's above 4.14.
This is TradeTheNews.com. Non-defense expected plus 0.3, and shipments also plus 0.3.
TradeTheNews.com.
Ten seconds. Minus 0.5% in line. X transportation minus 0.5%, 0.2 higher. Capital goods and defense plus 1%, and above expectations. Shipments plus 0.8%, also well above expectations. Back month was revised higher on the headline to 5.1 from 4%. Also revised higher. X transportation to plus 0.6%. Good orders non-defense plus 1.5%, also revised notably higher, and shipments revised higher to 1%. So again, the headline number, durable goods in line at minus 0.5%, and then we saw beats across the board and back month revisions higher.
Like I said, you'd be surprised how often you get lucky. It moves the way it's supposed to move. Can I get a hell yeah? How many people took the 5-8 cross like we talked about? It was the first 20 minutes of our conversation today. To sell that 5-8. Eric did, Oscar did, YJ did, Ken took the binary. Yeah. Good. Marina's got it. Justina's got it. Right on. White says he took the hourly 21. It's the same thing. So, for example, we were talking about how the 21 is magically similar to, or sorry, the 200 is magically similar to the hourly 21. You'll see there's quite a difference, right? If you actually look at the price between the two. But you have to realize that the moving averages are moving. Hence the name moving average. But the moving average on the hourly 21 only updates every hour. Where the 200 EMA on the 5-minute updates every 5 minutes. So there's going to be a spread between the 205 and the 2160. And all of a sudden, when you get a new hourly candle, it drops and that spread narrows. And then they diverge over the course of, well, usually diverge at a trending market over the course of the hour again. And the 200 on the smaller time frame, in this case on the 5-minute, is a way to sort of update and revise your hourly 21, where your hourly 21 would be if the hour shifted now. So yeah, so you do the, you're doing the math properly, which is fine. But generally speaking, it's not necessary. Because what happens is then you have different chart settings for different time frames, and then you get caught. you get caught in a problem there. So what you, because it's not the numbers. It's your ability to I don't know, it's not the hard number, but sort of the soft understanding of what's happening and how you look at it. So you're supposed to look at your 5-minute chart and your hourly chart and essentially see the same thing. Yeah, well, not application. That's still a mechanical kind of feel, and that's not what I wanted to go. It's more like I want you to use all time frames together to paint the same picture. And so you get into a bit of a problem if every time frame you've adjusted the moving averages, because now you're absorbed into the moving averages like they're telling you something. Well, they're not telling you anything, right? So I'd like you to, ideally, and you don't have to, but to have data that you find important, acknowledge that there are different market participants and that they use different time frames to make decisions, but generally speaking, we all want to do the same thing. Right? Buy low, sell high. Okay. Generally, that's what most people want to do. And so I don't want you to get caught in the magic of the numbers. And you're like, I don't know why I sold that, but that's what my 21 told me. I want you to make your decisions and then go to the number, go to the charts, or that kind of thing. And one trap that you can fall into, and this is the other reason I'm being tough on you, Wyatt, is that this is true of anyone that's tried to develop a robot or an EA for auto trading, is that what you do is you go through the number, or you go through all the data, and you create the perfect algorithm that fit in past performance. But then you find out it doesn't work in the future. Why? Because, well, all kinds of things have changed. And what you were doing last month or last year could be the exact opposite of what you're doing now, because things have fundamentally changed and market sentiment has changed. So therefore, your technicals may have the opposite effect. So anyways, it's like backfitting, right? Adjusting, and what'll happen is you get so addicted to tweaking all your time frames and all the moving averages and all your different time frames to fit some sort of thing, but they'll never fit together. It's like looking for the unified theory, of physics, quantum mechanics and quantum physics kind of working together. You'll never know which one to believe. And I'd rather you have consistency. Right, curve fitting, exactly. Right? Yeah. So again, the way to use 200, it's not perfect. It's not supposed to be perfect. Okay? You're right, if you do the math, you need to tweak it so that you get the exact number, so that it exactly is the 4 hour or the 1 hour, in this case the 1 hour. But that's not what I'm asking you to do. I'm asking you to look at both time frames and kind of see between the lines, if you will. And understand that one is adjusting a lot faster than the other, but the hourly will come down, right? So on and so forth. So anyways, I think you get it. Oh yeah, let's do that. Thank you, Oscar. I almost forgot. Commitment to Traders report. Let's go through that. Will you enjoy your pips? This is the Commitment of Traders report. Hedge funds. speculative hedge funds. Okay. This data is about a week old. No increase in short positions. Small increase in long positions. But we know that fails. So we'll stay away from that. Piggy. Okay, short positions. No change. Long positions. A few, right? We got 1, 2, 3, 4 weeks in a row now. Slight increase in people buying the British pound. No real change in people shorting. So the net is going to be positive. And again, the net going over the last several months is slowly rising. The same amount of bears, but just a few more bulls. Cool. Again, that change occurred right around that IMF report. Yo way, yo way. Case Shiller coming up at 9. No, no, no. Okay. Japanese yen yen. Short positions in orange. So there's an increase in Japanese yen shorts. Long positions are in gray. Look at that. Giant increase in long positions. Somebody's going to lose a lot of money. So net change, none. Well, we know as of the last few days, those people that went long got slaughtered, didn't they? Well, that's what they get. Remember, this data is as of Tuesday of last week. Okay, Aussie. Short positions, just slight increase. Long positions, slight increase. Okay. Notice this, guys. Amazing, huh? Look at this big dramatic change here when we hit 75. The market is technically long. So my advice to you on this is look at the 4-hour and the daily 4H or the 1D. Look at the oscillator. And when it's, let's say, 90% oversold and starting to rise again, look for a reversal pattern. And if you're a bull, stay long. That's likely to happen near 75, but we touched 77 today. If you were on this earlier today, you could have bought USD. Well, I wouldn't have wanted USD, Aussie versus USD, but Aussie versus USD, today you could have bought it at 77.77. That would have been cool. Oscar says it's 95 oversold now in the daily. Really? Okay, maybe you want to be long Aussie yen or Aussie Swissy or something. You know, I don't know. Food for thought. Make a decision, right? Kiwi versus US dollar, because remember, these are based on futures contracts in the United States. So they're Kiwi dollar, for example. Okay, very little change in price. The market went bearish. This is very bullish for a while, now is bearish. Short positions increased, long positions decreased. That's a pretty dramatic change over the course of 2-3 weeks. So basically neutral, right? But it did dip below the waterline, which means there are more bears than bulls. And kitty cat, what was that, Rady? And look at that. Okay, short positions have been falling. Long positions have been falling too. The market has gone from bearish to neutral. Okay, but I don't think you're going to see a dramatic, move in USD CAD. Okay, you might want to look at CAD yen, CAD Swissy, Euro CAD, that kind of stuff. Okay, if you're going to buy it, you know what I'm talking about? So, for example, right, you could be setting up your longer term opportunities. Okay, remember, you're gonna play it this way, and then you're gonna play it this way, and if it breaks to the upside like you want it to, you'll have a chance to throw down a second trade on the pullback, and gone. That's what you'd be hoping for based on Commitment of Traders report. Okay, guys. Well, tell you what, we have Case Shiller coming up in 12 minutes, but this video is already well over an hour long, so almost an hour and a half long. So I'm gonna shut down the video. I'm gonna upload it to YouTube. But if you want to stay here in the room with me until 9 a.m., we can catch the Case Shiller news report together as a team. I just won't record it, that's all. You guys want to hang out with me for another 20, 25 minutes or something like that? Is that all right? Compliments of the firm? Cool. Well, it's just my way of thanking you for being on my team and being a client of TradersWay. When was the last time you went to our YouTube channel and left comment? This morning? Cool, right on. This weekend, last week, 2 days ago, yesterday. Well, thank you very much. I appreciate that. All right, so I'm going to stop the video or the recording, and we'll just wait out the news, okay? Cheers.